Joining us here in the KNX Business Hour. And speaking of the jobless situation, we'll be getting an update tomorrow on the KNX Business Hour from Labor Secretary Hilda Solis. KNX Business Hour continues with the Dow closing up 220 points at 11,435, NASDAQ of 37 points at 2577, and the S&P 500 of 23 at 1,221. The yield in the 10-year note back to 2.49%. Stocks rallying on a weaker dollar today after the Federal Reserve pumped in $600 billion, or plans to pump in $600 billion to stimulate the economy by buying treasuries. Today, Fed Chairman Ben Bernanke defended his decision in an op-ed column in the Washington Post, saying his approach looks to be effective already because stock prices rose and long-term interest rates fell when investors realized the Fed was preparing to launch the new program called quantitative easing. A different view now from Peter Schiff, the president of Euro-Pacific Capital, who's with us now. Peter, give us your view of the Fed's move this week, the dollar tanking today, and the rally in the precious metals we've seen, as well as the rally in the stock market.
Well, the Fed action is reckless and irresponsible, to put it mildly. QE1 was a mistake. QE2 is an even bigger mistake. We're following this Pied Piper of monetary madness down a path of economic ruin. They should probably call this the Titanic, not the QE2, because it's going to sink the economy, it's going to sink the dollar. That's what you're seeing today. You're not seeing a rally in stocks. You're seeing a decline in the value of money. That's why gold prices are surging $30 or $40. That's why oil's up $2 a barrel. That's why the dollar is making a new 52-week low. That's why commodity prices are making a new 52-week high, because the Federal Reserve is impoverishing every American citizen who has dollars, who works for wages, who has money in the bank. You have to rush to protect yourself, before it's too late.
All right, do you see an iceberg ahead?
Absolutely. As I said, the entire U.S. economy is going to go down because we're following the advice of people like Ben Bernanke, who have never gotten anything right in their entire career. Yet we continue to allow them to control the money supply, interest rates. This is a disaster. The Fed is deliberately creating inflation as if inflation is going to make the economy better. That's Ben Bernanke's idea. We have a lot of people who are unemployed, so let's create inflation, and somehow inflation is going to create jobs. It's not going to create jobs. It's just going to make life more miserable for the people who don't have jobs, because the cost of food and energy is going to keep going up, and it's going to make it more miserable for the people who do have jobs, because their paychecks are not going to go as far.
Where are the ports in the storm?
Well, gold, silver, agricultural commodities, energy, foreign stocks, foreign currencies. Everything I've been advocating for the past decade has been leading up to what's about to happen. It's all about protecting your wealth, because the people who leave their wealth in dollars are going to get wiped out. Quantitative easing is a gigantic tax. It's a tax on every American citizen who works for wages in dollars, or anybody who's foolish enough to have government bonds, to have municipal bonds or corporate bonds, to have cash in the bank or in a CD, or to have cash value in an insurance policy. This is a massive tax. It's going to wipe out the middle class. It's going to wipe out a lot of people who are right now think they're wealthy. There are a lot of millionaires who are retired who are going to be, on soup lines in a couple of years because of what the Federal Reserve is doing. The people that understand this are going to act quickly, and they're going to, they're going to get out of the dollar and do what they can. I've even advised people, if you don't have a lot of money, just figure out everything you're going to need in the next few years and buy it now, because it's going to get a lot more expensive. You can store food, you can buy, toiletries, you can buy sugar, you can buy coffee, you can buy, seeds, so you can plant vegetables, all sorts of things, because the prices are just going to go ballistic.
All right, in the meantime, we've seen a very impressive stock market rally today, so people feeling good about it.
Well, remember, it's not that the stocks are going up. It's just that the dollar that we use to measure the value of stocks is going down. It's like if I gave you a 6-inch ruler and I said that's a foot, right? Does that mean you're 12 feet tall if you're 6 feet tall? No. It doesn't mean you're getting any taller. It just means I'm measuring you with a ruler that has fewer inches. That's what's going on. The Dow Jones might go to 20,000. It might go to 30,000. But what difference is that going to make if food prices or energy prices are rising 3 times that fast? It's all relative. So even though people have more money in the stock market, they're going to have a lower standard of living, because the things they need to buy when they sell their stocks or you spend their dividends are going to cost a lot more.
Peter Schiff, President of Euro-Pacific Capital. Peter, again, thanks for joining us here today in the KNX Business Hour.
Sure. Thanks for having me on.
Price of gold today stands at a record high close of $45.50 to $1,383.10 an ounce, and silver popped higher, but $1.61 to $26.04 an ounce. With us now, Zachary Oxman, managing